It is 8:11 a.m. Pacific Standard Time. It is the fourth day of February 2026, and this is episode 1250 of Bitcoin. And Tom Lee says Bitmine's $6 billion loss is by design. Oh my God. Okay. Yeah. Dream on, dude. We've got that one to start out with today here on the Bitcoin and podcast. It's all the news that you can use about Bitcoin and macro around the world and more with your host, me, David Bennett, here on the Bitcoin and podcast. Next up will be Tether. Looks like they're backing off of their valuation target. We'll tell you all about it. And then we've got a guy got sentenced to 30 years for his crypto-fueled dark web drug market. Yeah, maybe the U.S. government stole some more Bitcoin from him. Then in Nevada, Coinbase is in trouble because of unlicensed betting. Dude, how many times did I got to tell you? The Kansas City mob doesn't like anybody messing around in Nevada when it comes to gaming. You could find yourself, on the other end of the business end of a stick with kneecapper McGinty doing shit like that. Then in the second half of the show, France is doing French things. They're considering restricting VPNs, and we'll tell you why. It's just so freaking transparent at this point. But how is it that you might think Bitcoin to a higher price? Well, we've got a story about that one. Then the Smarter Web company has gotten listed on the London Stock Exchange, even though they are in fact now a Bitcoin treasury company. And poor Sam Altman gets roasted on Twitter because he feels useless and sad. Oh, poor little billionaire. But here's another big wham one. Let's start up here at the front of the show. Tom Lee. He says Bitmine's $6 billion Ether paper loss is, quote, by design. Shara Malwa has this one from CoinDesk. Bitmine Immersion chairman Tom Lee pushed back against criticism of its growing paper losses this week, saying the drawdown reflected the design of its Ethereum treasury strategy rather than a flaw in execution. In a series of posts on X, Lee said Bitmine is built to track the price of Ether and outperform it over a full market cycle, likening its structure to an index-style product rather than a tactical trading vehicle. I already have problems with this one. Actually, I only have one problem with that statement. Then why did you buy Ether? You don't actually have to own the underlying asset if you're just using it as a vehicle to track price. Whatever. With crypto markets in the downturn, however, the firm said unrealized losses on its ETH holdings are inevitable. Quote, crypto is in a downturn, so naturally ETH is down, Lee wrote, adding that paper losses are, wait for it, not a bug, it's a feature. And he's questioning whether similar scrutiny is applied to index funds during market declines. Dream on, pal. The comments follow recent reporting showing Bitmine sitting on more than $6 billion in unrealized losses after Ether slide pulled the value of its 4.24 million ETH holding down to about 9.6 billion from its nearly $14 billion in October. The firm added more than 40,000 ETH shortly before the latest leg lower, intensifying focus on its balance sheet exposure. Bitmine has framed itself as an Ether treasury company rather than a discretionary buyer, with its strategy centered on long-term ETH accumulation and staking yield rather than short-term price timing. That's a similar approach used by some Bitcoin-focused treasury firms, which argue that volatility is the cost of maintaining long-duration exposure to a core asset. That one I actually agree with. I agree with Tom Lee on that one. But the scale of BitMine's holdings means price swings have an outsized impact on reported results, particularly during periods of thin liquidity. So here we're back to this thinning of liquidity in the markets and the forced selling across derivatives markets. While the firm has previously estimated annual staking revenue of around $164 million, that income provides only limited offset during sharp drawdowns. Chairman Tom Lee has struck a more cautious tone on near-term market conditions, warning that crypto is still working through a deleveraging phase that could extend into early 2026. Lee's latest comments, however, make clear that the company remains committed to its thesis. Quote, bottom line, Ethereum is the future of finance. And $6 billion is a feature, not a bug when it comes to losses. Oh, we can tell ourselves the lies all day long, and nobody that is in Tom Lee's position, I think, wants to admit the truth. And that goes for Michael Saylor too. He's losing his ass. I mean, MicroStrategy's or Strategy's stock price is, plummeting. Everything is up in the air. And that goes for regular markets too. I'll get to energy here in a little bit. We'll see what it's doing. Nobody really knows what the hell's going on. And every time that shit happens, everybody just runs to cash. Even though they know that cash is going to be printed and that the value of that cash is continuously losing money, it's the devil they know. And I think that's the simplest explanation for what's really going on. That, and in Bitcoin and the wider crypto markets, sorry about that, but the thin liquidity thing is an issue. And that thin liquidity is born out of the fact that people are not wanting to deploy their cash right now. They've taken all their shit, well, not all of it, but they've taken so much stuff off the table, they've converted it into US dollars, and they do not want to deploy it right now. So liquidity is actually fairly thin, so very few market movers or market makers or whatever you want to call them are calling the shots right now. It's not like retail, it's not a whole shit ton of institutions, it's not a whole bunch of governmental entities. They're all basically just sitting on cash. And I have not looked to see what Warren Buffett is doing as of late, but I would imagine that he too is probably sitting on a lot of cash. He's probably been doing quite a bit of selling lately to get into a cash position for deployment later. We'll have to see. But meanwhile, Tether, they float a $5 billion raise after investor pushback on the $500 billion valuation target, according to Financial Times. However, this one is brought to you by Brian Danga out of The Block. So let's get to it here. Tether's closely watched push to raise external capital has scaled back, with advisors now floating a raise of $5 billion after investors balked at a proposed $500 billion valuation, the Financial Times reported on Wednesday, citing people familiar with the matter. The figure represents a significant step down from earlier discussions that had envisioned raising up to $20 billion. And you heard about that story here a couple of weeks ago on the Bitcoin Ed podcast. The initial fundraising framework, reported by Bloomberg in September, outlined a potential $15 billion to $20 billion raise for approximately 3% of the company, a deal that would have placed Tether among the world's most valuable private firms. While potential investors like SoftBank and ARK Investments were cited, a person involved cautioned at the time that the figures were top-end targets. Tether CEO Paolo Ardoino now calls those initial targets a misconception. Sounds like it's a feature, not a bug. Telling the Financial Times that the $20 billion figure was, quote, the maximum we were ready to sell. He added that Tether is extremely profitable, and it is, and has little need for additional capital, noting that insiders are reluctant to sell shares. The people told the Financial Times that talks are ongoing and terms could still change, adding that investor sentiment may improve if the crypto market rallies. Would-be investors have expressed caution over regulatory and operational risks, the report also mentioned. Tether has faced scrutiny since 2014, with approximately 1.63% of USDT transaction volume linked to illicit activity in 2023, totaling $19.3 billion, according to TRM Labs reporting. But by comparison, roughly 0.05% of USDC volume was linked to illicit flows last year. Additional concerns include the transparency and quality of Tether's reserves. S&P Global Ratings downgraded Tether's reserve rating late last year, citing exposure to high-risk assets such as Bitcoin and gold. Ardoino told Financial Times that the company had demonstrated to prospective investors the depth of its tool set for collaborating with law enforcement agencies. Despite these headwinds, Tether remains a highly profitable enterprise within the digital asset sector. According to a BDO attestation, the firm generated more than $10 billion in net profit last year, which is a 23% decline from the $13 billion reported in 2024. The firm currently holds $193 billion in total assets to back a circulating supply of $186 billion of USDT, reflecting $6.3 billion in excess reserves. Its $122 billion stash of U.S. Treasuries makes it one of the largest private holders of government debt globally, and Tether's market position remains dominant compared to its peers. According to the Block's data dashboard, USDT's $186 billion supply significantly leads Circle's USDC at approximately $70 billion. Circle, which previously went public, announced that it will report its Q4 and full year 2025 financial results on February the 25th. Ardoino told the Financial Times that the new U.S. stablecoin legislation signed by President Donald Trump has strengthened Tether's position in the American market. Last week, Tether launched its federally regulated USAT stablecoin with Bo Hines, a former White House crypto policy advisor overseeing U.S. operations. And that's that USAT token that they've launched in the United States that is Genius Act compliant. So Circle is going to be fighting on the home front of the United States with Tether. And honestly, my bet would be on Tether. Jeremy Allaire and the guys over at Circle have demonstrated nothing but contempt for Bitcoin, whereas Paolo Ardoino has always been a solid Bitcoiner. Say what you will about Tether. That's fine. I'm not exactly the biggest fan, but I can't just lie and say that Ardoino has never been a really good Bitcoiner. He has, and he remains so. It's just a fact. Okay, moving on to the operator of crypto-fueled dark web drug market, sentenced to 30 years. Vismaya V has it for Decrypt, and she says a Taiwanese national who built a crypto-fueled dark web narcotics empire worth over $105 million while moonlighting as a cybercrime trainer for the Caribbean police has been sentenced to 3 decades in a federal prison. Rui Xiang Lin received the 30-year sentence for operating incognito market under the pseudonym Pharaoh, overseeing a digital drug bazaar that sold more than 1 ton, 2,000 pounds of narcotics, including fentanyl-laced pills, to over 400,000 buyers worldwide between October 2020 and March 2024, according to a statement from the U.S. Attorney's Office for the Southern District of New York. That's right, SDNY, back on the case. McGruff, the crime dog. U.S. District Judge Colleen McMahon handed down the sentence following Lynn's guilty plea to conspiracy to distribute narcotics and money laundering and selling adulterated medications. Quote, today's sentence puts traffickers on notice. You cannot hide in the shadows of the internet. And our larger message is simple. The internet, decentralization, blockchain, any technology is not a license to operate a narcotics distribution business, end quote. I think the United States Code says that just fine there, Attorney Jay Clayton. Anyway, Incognito Market worked as a crypto-enabled dark web platform accessible via Tor that enabled more than 1,800 vendors to carry out over 640,000 narcotics transactions, including cocaine, meth, heroin, MDMA, and misbranded prescription drugs. To enable anonymous transactions, Incognito Market maintained its own internal bank where users deposited crypto into personal accounts. After each transaction, crypto was transferred from the buyer's to the seller's account, minus the 5% commission that funded operations and generated over $6 million in profit for Lynn. While managing Incognito from St. Lucia, Lynn conducted a 4-day training session for local police on cybercrime and cryptocurrency, later bragging about it on Facebook. In January of 2022, Lynn introduced a policy explicitly allowing opiate sales on the platform, which led to fraudulent prescription drug listings, and a 27-year-old Arkansas resident later died after taking the purported oxycodone, which was purchased on Incognito Market because it was laced with, of course, fentanyl. Because I guess that's what you do, is you just give people free drugs. Whatever. Lynn shuttered the platform in 2024 after stealing at least $1 million from users' deposits in the Incognito bank. He then attempted to extort the vendors and the buyers on the site while threatening to publish their transaction histories and crypto addresses unless they paid him. Oh my God. This dude is a scumbag. Homeland Security investigations arrested Lynn at John F. Kennedy International Airport May 2024 following a multi-agency investigation involving the FBI, DEA, FDA, as well as the New York Police Department. Ari Redboard, global head of policy and government affairs at TRM Labs, told Decrypt the sentence, quote, reflects how courts now view large dark web markets as core infrastructure of the illicit underbelly of the crypto ecosystem, not fringe platforms. Quote, while it falls short of the real-life outcomes in cases like Silk Road and Alpha Bay, pardons aside, it still sends a clear message that running these platforms carries consequences comparable to major organized crime, Redbird added. In addition to the 30-year prison term, Lynn was sentenced to 5 years of supervised release and ordered to forfeit $105 million. Okay, so after 30 years in the prison, he will have 5 years of supervised release and ordered to forfeit $105 million. So essentially a 35-year term, 5 of which is going to be supervised, and $105 million. Okay, well, yeah, I mean, this guy, I actually don't give a shit about this guy because he literally wasn't just operating a dark web site. I'm sure that this dark website, like Silk Road, sold a whole lot more than just drugs. And if it was just that, I'd have a problem with this. But it isn't just that, is it? Because A, he stole $1 million from the bank, which is user funds, and then he went on to extort not only the vendors, but his customers. They're all his customers, the vendors and the users, the people that are buying the stuff. But you can't extort your customers. That'd be like me extorting you. I'm going to tell everybody that you listen to the Bitcoin and podcast, and you're going to be so embarrassed. So therefore, you're going to pay me 10 million Satoshis. No, I'm not going to do that. Okay, first of all, it's ludicrous to suggest it, but let's say that there was a real embarrassment factor of listening to the Bitcoin and podcast, and I somehow or another I had all your information from all my listeners, and I threatened to. I mean, asshole. That's just being an asshole. So, as far as this guy's concerned, he can go fuck himself. Now, Oshi, who is literally out of stock of everything, but still, the one way to get this man back into the kitchen is to go to oshigood.us. That's oshigood.us and order his chocolate hodl butter. Oh my God. He's got regular HODL butter. He's also got crunchy coffee HODL butter, and he's partnered up with Satoshi Coffee Company to do that. But let me read you the ingredient list of the chocolate HODL butter. It's limited to 21 jars and a limited edition Oshi wooden spoon. Okay, so he may or may not make this again, but I really want him to make this again. All of the 21 jars, they're all gone. But maybe we can pressure Oshi into possibly making some more, because check it out. It has hand-peeled hazelnuts slowly roasted and caramelized in organic maple sugar, inspired by traditional Italian Gianduja. I'm not sure what that is. Anyway, so the rest of the ingredients are this. Along with the hand-peeled hazelnuts slowly roasted and caramelized in organic maple sugar, he has 100% cacao from Colombia via our friends and Circle P vendors, Bitcoin Beans. 85% dark chocolate from Costa Rica from Finca Yabisi, and I do not know that person or company. Then there's ghee butter from Virginia from our friend and also a Circle P vendor, Great Ghee. Then there's vanilla paste from Kid Warp Vanilla Beans. Kid Warp, if you're listening to me, get a hold of me on nostr if you haven't already, or if you have and I've responded and I've forgotten because I've got only 3 brain cells left. Kick me in the ass again. I need Kid Warp Vanilla Beans for sale on the Circle P. All of this is in it's like peanut butter, only it's not peanut butter. This is HODL butter. This is completely different. And it's got, at least 2 of the Circle P vendors in addition to my friend Oshi over at oshigood.us. That's oshigood.us. Let's kick this brother in the pants. Make sure that you use the code Bitcoin and so that Oshi at least knows that I made the sale for him here on the Circle P. It's where I bring plebs with goods and services for sale. And they're just like you, 2 other plebs just like you who want to buy said goods and services. But you will be buying in Bitcoin, because if you ain't selling in Bitcoin, you're not in the Circle P. All right, Nevada. Don't mess around in Nevada. It is still mob run. And anybody that tells you different either doesn't know what the hell's going on or they're lying to you, because they're part of the Nevada mob, which a lot of them came out of Kansas City. Anyway, legal action against Coinbase for unlicensed betting. This is from Atlas 21. The Nevada Gaming Control Board has initiated civil action against Coinbase Financial Markets for offering betting on sporting events without the necessary licensure. The lawsuit was filed Monday at the First Judicial District Court of the state of Nevada in Carson City, and authorities have asked the court to grant a temporary restraining order and preliminary injunction to prevent Coinbase from operating a derivatives exchange and prediction market related to sports betting. The legal action comes less than a week after Coinbase announced the launch of prediction markets in all 50 U.S. states through a partnership with Kalshi. Quote, "The board takes seriously its obligation to operate a thriving gaming industry and protect Nevada citizens," said Mike Dreitzer, chairman of the Nevada Gaming Control Board. Quote, "The action taken yesterday reinforces this obligation," he added in a Tuesday statement. Well, the case highlights tensions between federal and state regulation in the prediction market sector. While the U.S. Commodity Futures Trading Commission oversees Kalshi at the federal level, the platform can still face legal challenges from state regulators, and that includes Nevada. Polymarket is facing similar legal challenges also in Nevada. Last week, a Nevada court granted a temporary restraining order against a Polymarket operator, blocking the platform from offering betting on event-based contracts to state residents. The judge overseeing the case cited immediate and irreparable harm to authorities' ability to regulate unlicensed betting. So there you go. If you're out there in Nevada, just be very, very careful about what you do. Let's run the numbers. CNBC Futures and Commodities Brent North Sea oil is up 0.16% to 67.44, and West Texas Intermediate is down a quarter to $63.07 per barrel. Natural gas is up 5% this morning, $3.48 per thousand cubic feet, and gasoline is up 0.8% to $1.91 a gallon, while Murban crude is drifting slightly into the red, $68.25 a barrel. Shiny metal rock's having an okay day. I mean, mostly in the green, but not by much. Palladium is up a third. Gold is up 0.11%. That's at 4,940 dimes. Platinum is up a half point. Silver is up 3.7 at 86.39 an ounce. Ag is mostly in the red today. Biggest loser is chocolate, 5.93% to the downside, and the biggest winner is soybean, 2 1/3 in the green. And then on to live cattle, a third point rise. Lean hogs is up 1.5, and feeder cattle up 0.75 point. Legacy indices are mixed fully today. I got S&P down a quarter, NASDAQ is down 1.25, but the Dow is up 0.75 point, and the S&P Mini is up 0.75 point. So it looks like tech heavy stuff are getting hit fairly hard today. But I saw a couple of headlines that suggested panic and fear. Oh my God, the tech bros, what are we going to do? They're going to die, and AI and whatever. And it's like, and then I go and I look at the NASDAQ. Dude, it's not really all that much down if you zoom out. And I don't know, man. I think what we're seeing is a fear phenomenon around the world across all markets. If it has anything to do with the economy, whether global, national, local, or if it has anything to do with financial markets, if it has anything to do with dollars or yen or pesos or pick your fiat, the fear is palpable. It's not just Bitcoin. Everybody is terrified. Nobody knows what the hell to do, right? We're not alone in all this. Even gold is fluctuating on its rise back up. Silver is fluctuating on its rise back up. It's the time that we live in. It's not a particular market. All these markets are fragile as shit right now. And all that fragility, that comes from fear. Think of fear like this. If you leave plastic out in the sunlight for a long, long, long time, it gets brittle. Why? Because the constant pounding of the ultraviolet light radiation from the sun is breaking down the bonds of the polymers that make up all of the plastic in whether you leave a Coke bottle out there. And that's why eventually clear plastic becomes foggy, and then even longer, if you pick that thing up and you squeeze your hand around it, it cracks. And the reason is because now all those polymers are much, much shorter because of all the UV damage that has been done. Fear is the UV for everything, whether it's a marriage, whether it's relationships with your children, whether it's financial markets, whether it's other family, whether it's money, whether it's real estate. It doesn't matter what market you're talking about, from markets of love all the way to markets of money. Fear will make everything brittle. And that's what's going on here. We have brittle markets around the world. Is it all Orange Man's fault? No. If Orange Man wasn't here, would it be as bad? Maybe, but I don't know. If Kamala Harris was in charge, the financial markets may actually be better because she's not going to step out of line like Orange Man is constantly stepping out of line. And I don't know which I like better. Do I like somebody who's stepping out of line or not? And if I don't like it because all I want is my money protected, then I will surely probably lose all that money eventually anyway. And we are at $73,100. We are now at a $1.46 trillion market cap. We can only purchase 14.8 ounces of our favorite shiny metal rock for R1 Bitcoin, of which there are 19,984,185 and 1/2 of. Average fees per block are nominal, 0.02 BTC, taken in fees on a per block basis. It's about 45 blocks carrying 25,000 unconfirmed transactions waiting to clear at high priority rates of 5 sats per VByte. Low priorities get you in at 3. Mining, hash rate. We've actually gained in hash rate from yesterday. 896 exahashes per second as opposed to 870 whatever it was yesterday. So we're actually putting some hash rate back online for protection of the Bitcoin network. And now from Stolen Value, I have Jason High with 250 sats says, we are ruled over by satanic pedophiles who feast on the blood of children. Sad. You know, let's step back from that for a sec and let's draw that out just a bit. He's right. But many people have been trying to tell us this for decades. And I'm going to say the name. Alex Jones was one of them. He was saying shit 15 years ago that knocked socks off. Everybody pointed at him and laughed. Well, not everybody, but most people were pointing at Alex Jones going, you're a tinfoil hatter. You're a conspiracy theorist. There's no way these people are doing that. And it turns out he's right. Again, he's been right about quite a bit of things. Is he wrong about shit? Yeah, fuck yeah, he's wrong. What I don't like about Alex Jones is he doesn't have any solutions for anything, but that's okay. I mean, he's Alex Jones. That's his shtick, right? But I'm just saying, he was right. And a lot of other people that were trying to tell us that these guys are all pedophiles, they're right. And that pedophilia was used to compromise people in positions of power. Probably, not probably. I could actually see it where the people that use pedophilia to compromise the people in the positions of power to do their bidding themselves may have not actually been pedophiles. They were just like, oh yeah, humans have this weird thing. And if we pull the right levers, we can get them to do something really, really naughty. And we'll take pictures and we'll record voices and we'll do all the shit. We'll send it to them and say, if you don't do exactly what we want you to do, all this shit comes out. And you wonder why modern society is the clown show cesspool that it is. Pies with 121 says, thank you, sir. No, thank you. Nostr Gang with 121 says, marked safe from appearing in the Epstein files. Again, I am still not in the Epstein files, thank God. Nick Dose with 142 says, cheers. Cheers, sir. Jay with 2100 says, thank you. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use and more with France. Considering restricting VPNs to support under 15 social media ban. So if you're under the age of 15, it's for the children, ladies and gentlemen, it's for the children. Thank God. You know, I'm so glad that France is, thinking of the children because, nobody else does. Of course, we know this is bullshit. However, Decrypt and Simon Chandler brings us this one. France's government may consider restricting the use of VPNs, virtual private networks, as part of efforts to keep children 15 years old and younger off of social media, according to Digital Affairs Minister Anne Le Henaf. Virtual private networks, or VPNs, are services that provide an encrypted connection to the internet, shielding your internet protocol address from prying eyes. Speaking in an interview with France Info, Henaf said that the social media ban for under 15s was only the beginning. Let's read that again. Henaf said that the social media ban for under 15s was, quote, only the beginning, and that there are other measures that they could consider, including restrictions on VPNs. Quote, VPNs. I'm not naive. We know the digital environment in which we're all growing. Obviously, VPNs exist, she said. Quote, VPNs are the next subject on my list, end quote. Last week, the lower house of France's National Assembly approved the bill that would ban social media for under 15s, voting in favor by 116 to 23. The legislation now requires approval from the National Assembly's upper house before becoming law, with President Emmanuel Macron calling on parliamentarians to accelerate the approval process so that the ban comes into effect by the time the next French school year begins in September. HENAF provided no specific details as to the extent to which VPNs might be restricted or how any restrictions might be achieved in practice. However, criticism from some quarters, including from writer and director Alexandre Khadin, has spurred the government into providing clarification. In a response to queries from French network BFM TV, a spokesperson issued a statement specifying that HENAF accepts VPNs have numerous legitimate uses and that she is not looking at banning them outright. Pausing to say, bullshit, yes she is. Figures within the VPN and tech industry have taken encouragement from these clarifications, with a spokesperson from NordVPN telling Decrypt that the French government recognizes how VPNs play an essential role in data security and business operations. Quote, the current legislative debate is specifically targeting the use of VPNs by minors to bypass age verification systems, for social media or restricted content. And to this end, NordVPN believes that the government will be exploring technical measures that would limit VPN access to underage users, something which is also happening in the UK. Quote, the VPN landscape in France remains unchanged for now, and consumer and pro services continue to operate legally, so our services remain fully compliant and operational, according to NordVPN. Providers of decentralized VPNs may also be more relaxed about potential restrictions than providers of more traditional VPN companies, which, according to NIM VPN CEO Harry Halpin, can be banned via court orders and by blocking IP addresses. Quote, however, a ban on a blockchain-based decentralized VPN like NIM VPN, where no single entity can control the software, servers are activated via smart contract, and IP addresses can easily change, is much harder to block, he told Decrypt. Yeah, I'm skeptical. Blockchain-based VPNs, let's, without a little bit more clarification on that, okay, well, I'll let it go. Even if decentralized VPNs may potentially evade restrictions, Halpin calls into question recent efforts to limit internet access, which may create a slippery slope that leads to a society of control. He said in the 2010s, bans on VPNs were done by autocratic regimes, but today it is done under the auspices of democracy and, quote, saving the children. But in reality, bans on VPNs signal an authoritarian attempt to crush political dissent, end quote. More than that, it's more than that. It's not just political dissent. It could be economic dissent, which is inherently, yeah, it has political ties, but it is a completely different flavor of dissent. It could be social dissent. It could be any kind of mutterings that the population of your country has, and that's what this is about. This has nothing to do with saving the children. This has everything to do with the control of the citizenry that is clearly up in arms, and you don't want to lose not only your life, but your power base. Not only do you want to remain alive as one of the pedophilic pieces of human filth that we find ourselves being, told what to do by, but they also want to continue to have their money, continue to have their black tie parties, continue to schmooze with the likes of Jeffrey Epstein. Again, I'm still not on the list, thank God. That's what this is. And my audience knows that. But I guarantee you that most of the normies on the street, they will not allow you to venture further than, oh, it's for the children. And if you do, they will protect the system. This is the scene of the Matrix where Morpheus is trying to tell Neo, some of these people are so damaged, have become so undone, that they will do anything and everything to protect the very system that enslaves them. That is exactly what Aldous Huxley wrote about. It's what 1984 was about. That's what this is. This is the mechanism of control. I believe wholeheartedly now, and this is why you get people that talk about the reptiles, that they're lizard people. If you're just calling them lizard people as a derogatory form, then yeah, I'm all together with you. Do I think they're actually, composed of reptilian DNA? No. I think that's bullshit. But what I do believe and have come to understand is that there are two different kinds of humans. Maybe it's representative of that there were Neanderthal humans, and then there were like Homo sapiens, Homo sapiens and like Homo neanderthalis or whatever. And the Homo sapiens basically won that genetic battle. But did they? Did they really wipe out the Neanderthalic DNA? Is it possible? Is it possible that we are dealing with a genetic makeup of what we see as human that looks no different than any other human, that in and of itself is so inherently different that it thinks of things like power and structure and control not as bad things, but as things that are inherently good and should be common, and that the control levers are guided by those people that are attracted to pulling those levers. I really do think that this is actually the case. They're not lizards. They're not reptilian. We're all hominids. We're all kind of Homo sapiens. But is it that there's Homo sapiens sapiens and Homo sapiens neanderthalis or something like that, where there's just enough of a difference where we are actually acting as different entities upon this planet, yet we can still interbreed, because that's what a species is. A species, a male and a female in a species can mate and have children, right? Generally speaking, especially in the mammal world, like the animal world, right? Not talking about bacteria or fungi. There's different structures there. But as far as animals are concerned, species cannot interbreed. Like reptiles cannot get a dog pregnant, right? Another dog can get a dog pregnant, and another reptile can get another reptile pregnant. But dogs and reptiles, generally speaking, you don't see them mating because there's nothing that's going to come out of that thing. And if it did, it'd be fucking horrific. But there are different breeds of dogs. Wolves can impregnate a Chihuahua. Wolves and Chihuahuas are very different animals, yet they're part of the same species, so they can interbreed. And I wonder, and I do not know this for a fact, but I do wonder because I know that power attracts some of the worst kinds of people, the worst kinds of humans. Maybe the people that are attracted to that are inherently a different breed of human, but still can interspeciate with the rest of the humans. I think that that's what we're dealing with. I really do. This person, this whatever her name is, that says it's for the children, she does not care about the children. She cares about control. And by restricting VPN access, they may be taught, this person from like whoever it was from NordVPN, was saying that this could be like just crushing political dissent. It's not just political dissent. It's all kinds of dissent. And the people that are in power right now are the people that are causing the dissent in the majority of the humans that are upon this planet. If all the humans that were truly in dissent at this time rose up all at the same time, they would have a massive problem. And the way that you make sure that all these people do not rise up at the same time, you kill their communication, aka Tower of Babel style shit. But that's a different story. And I don't think God was doing the Tower of Babel for nefarious purposes, but it completely crushed communication the minute that everybody started talking in different languages. This is sort of the same thing, but it is driven by the worst sorts of people ever. Speaking of humans and species and Homo erectus sapiens Neanderthalis or whatever, how your brain may drive Bitcoin higher. Omkar Godbowl with this one out of CoinDesk. Bitcoin's bear market feels brutal and could deepen. Analysts are suggesting potential Fed interest rate cuts and crypto-specific regulatory breaks are required to turn the tide. But beneath the surface, something as simple as two behavioral biases may play a pivotal role: anchoring bias and regret aversion. Last year's bull market didn't feel like a bull market. Absent was the frenzied retail and institutional stampede of 2021 or 2020 and 2021 or the 2017 years. Spot ETFs sucked in billions, but mostly as a result of arbitrage bets, not outright bullish positioning. That's possibly due to the anchoring bias, a mental shortcut where people fixate on one piece of information, like a reference price, and skew their judgment of value. Investors may have been swayed by Bitcoin's $100,000 price tag and then balked. Quote, "That's way higher than typical tech stocks. Even NASDAQ doesn't trade that high. Must be overpriced." End quote. In other words, they could have anchored on familiar benchmarks, decided BTC was too costly, and sat on the fence. Fast forward to today, Bitcoin trades at 73,000, well off of its peak. If it drops under 60%, a 50% discount to its October high, last year's holdout have every reason to pile in long and strong. That's regret aversion, the fear of missing future gains after sitting out, driving aggression dip buying in assets with proven upward trajectories. While behavioral biases offer one compelling theory for a snapback, there's still the possibility that macroeconomic influences and regulatory developments could call the shots. For now, the crypto market is stabilized, with Bitcoin bouncing to 76,000 from overnight lows of near 73, and of course we're back there again, amid oversold signals from technical indicators. And then they talk about shitcoins, but I won't. On-chain data shows that profit-taking by long-term holders or wallets with a history of holding coins for over 5 months has slowed, according to Tagus Capital. Still, the risk of a deeper sell-off prevails if Wall Street's tech-heavy index, the NASDAQ 100, extends Monday's sell-off and Treasury yields rise further. Key U.S. data due for release today, the ADP employment and ISM services, could add to market volatility, so stay alert. Now, I'm going to pause here to say that the ADP employment numbers did come in, and they showed half of the jobs that were expected to be available are available. I think they were expecting like 44,000 or 50,000 or something like that, and they got 22,000. So do the math. That was not the kind of jobs report anybody wanted to see. So yeah, I mean, it's possible. I think we're just in a bear market. You know, I wish we weren't. It's not like I like it. You know, all the people that are, this drives me crazy. All the Bitcoiners, the hardcore Bitcoiners that will dance around lower prices and say, "I need you to go lower. I need you to go lower." Well, how long do you want to do that for? You want to be 80? Like do this for 40 years, you're 40 now and then you're 80 years old and you're still waiting for, we're not waiting for, but like praying to God that Bitcoin goes down lower so that you can stack more sats. Does that really make any sense at all? And I just don't think that is a really healthy reaction. I think it was fun to do that for a little while, but things have changed. Yeah, we're 17 years into this project. We don't really need to, I don't know, somehow or another convince the masses that Bitcoin can't be hacked or that Bitcoin is truly decentralized, and here's why, and here's the underlying structure. It's like all people give a shit about now, right? About right now is the price of the asset, of any asset, real estate, oil, doesn't matter. I think that part of the narrative, I think we're done with that. I think now we move into circular economy more. I think we move into medium of exchange more, the precepts of what money is. The underlying technology, I mean, there will always be a place to explain that to people, but by and large, I think people kind of figure out that, well, this shit can't be hacked. We're good on that side, but this continuous wishing that Bitcoin crash when you're a Bitcoiner, and then you verbalize that shit on X and Nostr because you want to stack more sats. How long? I mean, do you want to actually be dead and in the ground? And the last written on your tombstone is, I hope the price goes lower because I want to stack more sats. That doesn't make any sense. At one point or another, we got to quit doing that shit. I'm just musing at this point. So let's get on with the show. Bitcoin Treasury, the smarter web company, has now been listed on the London Stock Exchange. I don't know how their stock is doing. Maybe Micah Zimmerman from Bitcoin Magazine will tell me. The smarter web company began trading on the main market of the London Stock Exchange today, marking a major milestone for the UK-based firm as it continues to position itself as Britain's largest publicly listed Bitcoin holder. The company's shares debuted under the ticker SWC at 43p. Now, pausing to say, I think that means 43 pence. And I don't know enough about the British pound sterling to know. I'm guessing that's like 43 cents to the dollar, something, whatever. The uplisting follows the company's initial public offering on the Oshi exchange in April of 2025, where it went on to become the UK's best performing equity that year. Founded in 2009 by Chief Executive Andrew Webley, the Smarter Web company began as a web design agency, and they were focused on building bespoke, mobile-friendly websites for small and medium-sized businesses. In 2025, the firm pivoted toward a Bitcoin treasury strategy, deploying capital into Bitcoin as what it described as digital capital on its balance sheet. Today, the Smarter Web company holds 2,674 Bitcoin, making it the largest UK public company by Bitcoin holdings and the 29th largest globally among public firms. According to the Smarter Web company, roughly 221 million pounds sterling of investor capital has been used to acquire Bitcoin at an average price of just over, breathtaking, $111,000 per coin. Bitcoin was trading near 77,000 on Tuesday, down significantly from its peak above 120,000 last year. Yeah. Speaking at a London Stock Exchange opening ceremony, Webley said the main market listing represents the next stage in building long-term British public company aligned with Bitcoin. Quote, moving to the main market of the London Stock Exchange marks the next significant milestone in that journey, and I am committed to building a British success story that contributes to the UK economy and demonstrates how Bitcoin can be used as digital capital. End quote. Webley also reiterated his ambition for the company to enter the FTSE 250, potentially as early as the third quarterly rebalance of 2026, with longer-term aspirations to eventually reach the FTSE 100. The Smarter Web company strategy has drawn comparisons to US-based firm Strategy, which pioneered the corporate Bitcoin treasury model. While a growing number of companies have since adopted similar approaches, Webley has argued that volatility is an inherent feature of the strategy rather than a flaw. Oh, it's a feature, not a bug. Despite its recent decline from a peak market capitalization of over 1 billion pounds sterling, Webley recently said the company plans to continue accumulating Bitcoin regardless of price. The firm spent about 220 million pounds sterling accumulating their Bitcoin, while its shares have plunged 95%. Oh, wow. And I thought Michael Saylor was having problems. Webley argues the strategy is long-term, noting the company has increased its Bitcoin holdings per share despite the downturn, and they plan to seek more institutional funding with a move to the London Stock Exchange's main market. That is the end of the article, but to say a little bit more about that, at this point, we've passed into enough of a decline that we're looking at a 40% drawdown. And in the short term, that's going to weigh on sentiment. So the stories that I foresee coming out in the future will be delistings, some bankruptcies, but I don't think it's going to be strategy. I really don't. But I think Metaplanet's on the table. I really do. Not Similar Scientific because they got bought out, but whoever their parent company is, I can't remember who it is. Is it XXI? But they may be on the table too. And whoever bought Similar, I think is on the table. It's possible. I mean, that was the issue that we were talking about when these treasury companies started buying Bitcoin hand over fist. Is like, well, what happens if you get into a situation where you have to deploy that in a way that you sell it for US dollars because you've got to do whatever it is that you're going to do. See, this is the tide going out. And Warren Buffett used to say it's where you see who's been swimming naked. Sentiment is going to do that. But sentiment is also going to weigh on things like, will people want to be investing in companies that continue to buy Bitcoin? And I'm talking the short term. This isn't forever, right? This is maybe I'm talking 12 weeks is what I consider very short term, right? Am I calling it for a 12-week sentiment, bear market? No, I'm not actually saying that. I'm just saying that I think in terms of short being kind of 12 weeks. And after that being medium term and, and getting into the years is longer term. But we have hit negative sentiment is what I'm trying to say here. And that's a fact. And I can't wave a magic wand and make it all better, right? That other news story was talking about, maybe it's going to take a Fed rate cut. Yeah, it's going to take that, and it's going to take, probably at least one other catalyst. And also right now, we've got a liquidity problem. All of this is compounding each other, and it's kind of like a doom spiral. It's not going to end up in doom. I mean, it already hurts, and there's some people that think that this is doom. It depends on what price level does it turn into doom for you. But still, we're in a situation where sentiment in the public is, if you were to go talk to somebody about Bitcoin right now, chances are good they'd be laughing at you like they were laughing at your ass in 2019. I don't know. The only real remedy is to stack sats and make sure that you have your own private keys to control them with. Now, let's get off the Bitcoin train altogether and talk a little bit about AI, because that shit's not going away, by the way. It's just not. You can wish it away all you want. It's not going away. Because we got people like Sam Altman. And AI, artificial intelligence, has made Sam Altman feel useless and sad. Ex-users tried to make him feel even worse. Josh Quittner's got the story from decrypt.co in a moment of raw tech bro vulnerability. OpenAI CEO Sam Altman took to X last night to confess that building an app with Codex left him feeling a little useless, and it was sad. OpenAI's Codex is an AI coding agent designed to help developers with software engineering tasks like writing new features, fixing bugs, answering questions about a code base, running tests, and proposing pull requests, all in a sandboxed environment that understands and interacts with real code. But the tool, Mr. Altman said, spit out feature ideas better than his own, sparking a nostalgic sigh for human relevance amid his hype for the singularity. Quote, I'm sure we will figure out much better and more interesting ways to spend our time. But I am feeling nostalgic for the present. he tweeted. Oh, Sam, welcome to the club of mortals staring down the AI abyss. Or maybe not. While the CEO is one of the most valuable companies in the world, or while the CEO of one of the most valuable companies in the world pondered his own obsolescence, ex-users treated his post like dry kindling, then supplied the accelerant and kept turning up the heat until nothing recognizable was left. Quote, feel better. You will have a $100 billion parachute exit. Meanwhile, 50 to 60% of white-collar jobs are eliminated due to AI and will cause workers to feel a tad more useless and sad, only without the parachute. End quote. Sniped one reply. Quote, I guess you can cry into a giant pile of money. Meanwhile, I'll go talk to a chatbot for the rest of my career, an OpenSea engineer wrote. Quote, thank you, I guess. And here's another one. Sort of like how I felt watching my career disappear because a league of no-talent AI bros can now prompt hollow copies of my work that are just passable enough to flood the internet with slop until it chokes, all because you trained your models without anyone's consent, replied food writer Chrissy Toombs. She writes about food. She's not a techie. She's an author. She is writing for magazines. And even she was lighting up his ass. And that was within the first hour of Altman's post. Nearly 3 million views and over 2,100 replies later, people were still venting at Altman. Most of the posts reflected user backlash over OpenAI's announcement or announced deprecation of GPT 4.0, which is slated to occur on February the 13th, with many replies taking Altman to task over model stability. Though the company is also retiring GPT 4.1 and GPT 4.1 Mini and 0.4 Mini as well as legacy GPT 5 variants, GPT 4.0 is a particular favorite among users due to its warm conversational style and multimodal capabilities. OpenAI even reinstated it after initial attempts to deprecate it following the release of GPT-5 after user backlash. The company said the decision reflects usage patterns. Most users now prefer newer versions like ChatGPT 5.2, which incorporate customizable personality and creative controls inspired in part by GPT-4o's strength. Some people applauded Altman for his honesty and apparent vulnerability. Aditya Agrawal, former CTO of Dropbox and an early Facebook engineer, said he was also, quote, filled with wonder and also a profound sadness. I spent a lot of time over the weekend writing code with Claude, and it was very clear that we will never, ever write code by hand again. It doesn't make sense to do so. Something I was very good at is now free and abundant. I am happy but disoriented. Both the form and function of my early career are now produced by artificial intelligence. I am happy, but also sad and confused. End quote, said Aditya. Well, join the club, pal. Okay. I honestly am not shedding one bloody tear for Sam Altman getting roasted on Twitter. And not because he created AI and not because, he said what he said, but because he should have known better. Dude, you said that on X, being the person you are. What did you think was going to happen? Which is why he did it on purpose. To send waves of sadness throughout the interwebs. You're dead. This is a man who's not sad and nostalgic about today. This is just like that French bitch that wants to kill the VPNs because she needs to save the children. She doesn't care about children. And Sam Altman isn't sad at all about what's going on. He wants to reinforce what's going on by making everybody very aware that AI and his creation have changed everybody's life. In fact, history books may actually list Sam Altman as one of the people that did more to change the world in a lifetime, and line him up next to people like fucking Napoleon and George Patton. I'm serious, man. Because it's like it or not, the OpenAI has kind of done that. And Sam Altman is the CEO of that company. So he kind of did that. None of this is good. I'm not applauding any of this shit. What I will say about AI is this. It's a tool, and it should be used as such. But tools are inherently useless by themselves. Like, so, for instance, let's say that all the humans on the planet winked out of existence right now. Just boop. Once we're, one time we're here, and the other time we're just not. Like just a second, and all like the books being held by all the students walking to class right now just hang in the air for just a microsecond, and then gravity takes over and they just all fall to the floor. Billions of people just gone. Electricity still on, computer still running. What does AI do? What's AI's purpose? Nothing. It doesn't do anything. And somebody out there right now is saying, oh, here's why you're wrong. Because there are agents out there that already have the ability to talk to other AI agents, and that's what they'll be doing, and they will be building stuff for who? And the first answer will be, and it will be correct, for AI. But after a while, without humans, there's nothing to actually build for. There really isn't. It's like, because AI isn't going to go explore the universe and populate other worlds. And there will be some other people out there that will say, well, no, you're wrong. They probably will. And you might be right. But to what end? See, that's why I think that the combination, and I'm not talking about singularity shit here. I don't like that talk. The combination of humans using AI to do other things for the progress of humanity, I'm okay with that. I really am. But when you unleash a technology upon because this has never been done before, right? When electricity occurred, right? It wasn't like this wholesale, like over like a couple of years that software engineers and 60% of them no longer have a job. That could actually happen. No, when electricity came online, it took decades. It took decades to spread in the United States. And then it took, a decade more to get into other countries. And it was a long, slow slog. And that's generally speaking the way all technology runs. It took a long time for the internet to be adopted. It took a long time for cell phones to be adopted. And then it took a long time for smartphones to be adopted. We really haven't ever seen anything like this before. I don't believe for 1 second that Sam Altman took to X to be a vulnerable tech bro. I think he did it to take all of our faces and shove it into the pile of shit that he just laid out for us. And even though the technology itself can actually be good, I still think that Sam Altman himself doesn't actually realize what this means. This, to me, Sam Altman is just rubbing our noses in it, making people feel continuously bad. Why? Maybe to force them to adopt the technology sooner than later. And he'll do it to save your career, like saving the children, but that won't be it. I think this is more about him wanting to be written into the history books as the one guy that created the one thing that spread faster than a virus across the face of the planet Earth. And he will have sealed his fate into the pages of every history book that will ever be written, even if we don't have books. There will be histories, they will be written or they will be recorded, but there will be some form of history. whether it's in a book or, I don't know, streamed directly into your brain via Elon Musk's mind meld thing, whatever it is. But you get my drift. Sam Altman is not what you think he is. I think he's just another scumbag. He's smart, but he's just one of these tech bro scumbags. And we see them populate all the positions of power. And if we want to decentralize anything, maybe what we should really look to do is to decentralize ourselves. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.